few things I am not. I'm not a cat. I am not an institutional investor.
We are seeing a phenomenon that I have never seen.
There's nothing normal about what you're seeing when it comes to this stock right now.
This has been very important, the democratization of finance. It has allowed the American retail investor to have the lowest execution cost they've ever had in the history of the U.S. financial market.
And they had a big short position, and that looks like a stinky conflict that you didn't come out straight on from the start.
As for me, I like the stock.
In the early days of 2021, a digital war broke out that threatened to tear down the walls of the traditional financial establishment, a conflict where millions of ordinary people, armed with nothing but their smartphones and a shared sense of defiance, attempted to beat Wall Street at its own game. At the center of this storm was Robinhood, a sleek and colorful app that promised to democratize finance for all, giving every person with a few dollars the power to trade stocks for free, a privilege once reserved only for the wealthy elite who could afford high commissions and professional brokers. It was a beautiful vision of a more equal world, where the small player finally had a seat at the table. But as the chaos of the GameStop short squeeze reached a fever pitch, the app that claimed to be for the people did the unthinkable. It shut down the buy button, leaving millions of its users helpless, while the big hedge funds scrambled to protect their fortunes. This is the story of the Robinhood paradox, a deep dive into how a company built on the promise of empowering the masses became the very thing its users hated most, and the dark reality of what really happens when a service claims to be free while you are secretly the product being sold. To understand how we got to the point of a national crisis, we have to go back to 2013, when two Stanford graduates, Vlad Tenev and Baiju Bhatt, launched an app that would change the world of investing forever by offering something that seemed impossible at the time: zero commission trading. Before Robinhood, if you wanted to buy a single share of a company, you usually had to pay a fee of $7 or $10 to a big bank or a traditional broker, a cost that made it almost impossible for young people or those with small amounts of money to build wealth through the stock market. Robinhood changed everything with its bright colors, easy-to-use interface, and a gamified experience that made buying a stock feel as simple and exciting as playing a mobile game, complete with digital confetti falling across the screen every time you made a trade. The app became an overnight sensation, attracting millions of millennials and first-time investors who felt that the old world of finance was too boring and too expensive, creating a massive wave of new market participants who believed they were finally part of the democratization of the global economy. While millions of users were enjoying their free trades and watching the confetti fall, a critical question began to emerge among financial experts and regulators. If Robinhood isn't charging its users any money, how is it making enough profit to become a multi-billion-dollar company? The answer lies in a controversial practice known as payment for order flow, a system where Robinhood doesn't actually send your trades directly to the stock exchange, but instead sells your trade data to massive Wall Street market makers like Citadel Securities. These giant firms pay Robinhood hundreds of millions of dollars for the right to execute your trades, because having a constant stream of data from millions of retail investors allows them to make tiny profits on every single transaction, a hidden tax that most users never even realize they are paying. This creates a massive conflict of interest where Robinhood's real customers aren't the people using the app, but the giant Wall Street firms that pay for their data, a reality that will come back to haunt the company when the interests of the small investors and the big market makers finally collided in a spectacular explosion. Let's take a quick break to thank our sponsor who makes these investigative deep dives possible. If you want a tool that actually works for you, you should check out The Alchemist. It's an intelligent, automated trading tool that puts the power back in your hands by analyzing market data and executing trades based on logic and math, not on hype or hidden agendas. Unlike the apps that try to gamify your financial future, The Alchemist provides a transparent system that works 24/7 to find the best opportunities, helping you grow your wealth without the need for digital confetti or hidden fees. Click the link in the description and use our code for a special 10% discount to start taking control of your financial future today. Now, back to the moment the buy button disappeared. Everything changed in January 2021 when a group of investors on a Reddit forum called Wall Street Bets realized that several giant hedge funds had bet heavily against a struggling video game retailer called GameStop, creating an opportunity for a massive short squeeze that could send the stock price to the moon. As the price of GameStop skyrocketed from $20 to over $400 in just a few weeks, the giant hedge funds began losing billions of dollars, and the entire financial system started to shake under the pressure of millions of small investors refusing to sell their shares. Then, on the morning of January the 28th, Robinhood suddenly and without warning restricted the trading of GameStop and several other stocks, allowing users to sell their shares but completely removing the ability to buy any more, a move that caused the price to crash and saved the big hedge funds from total ruin. The public outrage was immediate and deafening, leading to massive protests, a wave of lawsuits, and a historic congressional hearing where Vlad Tenev was forced to apologize to the American people while trying to explain that the shutdown was caused by a sudden demand for billions of dollars in collateral from the clearinghouse, not by a secret deal with his Wall Street partners. The GameStop saga and the Robinhood shutdown left a permanent scar on the world of finance, proving to millions of people that the democratization they were promised was only allowed to exist as long as the big players were still winning the game. While Robinhood eventually went public and continues to be a major player in the market, the trust that it built with its original users has been fundamentally broken, serving as a powerful reminder that in the world of finance, if you aren't paying for the service, you are almost certainly the product being sold. The Robinhood paradox shows us that while technology can open doors for millions of new people, the underlying plumbing of the financial system is still controlled by a small group of powerful interests who have the power to pull the plug whenever their own fortunes are at risk. As we look toward the future of investing, we have to ask ourselves a difficult question. Can we ever truly have a fair and open market for everyone? Or will the house always find a way to win in the end? Thanks for watching. If you found this investigation into the dark side of free trading insightful, please like this video and subscribe to the channel for more deep dives into the stories that Wall Street doesn't want you to hear. We'll see you in the next one.